Hello everyone, welcome back to another video. In today's video, we're going to discuss a footprint concept or the order flow concept that is called delta flip. In essence, the literal meaning means that whenever you see a delta in one direction and a change in the other direction, it's called delta flip. But it's not that, if you just apply that anywhere in the chart, it's not going to be as successful. I will just explain what our strategy is going to be with respect to delta flip, and then we'll see in the charts where we found some interesting places or inflection points where we could have taken this trade or use this strategy rather. What we are looking at is the first condition of this strategy is that the max delta should be very close, max stroke min delta, that is, should be very close to the delta. Okay, so that is one condition. Second is it should be as close to delta, so it should not be for example, the delta is 50% of max delta or min delta. That is not what we want. So one of the two will be really high and they should be close to delta. So when this will generally happen on a very big up bar or down bar, we'll just see. So in a sense, what we're trying to capture is a climax or a climactic bar that we call in volume spread analysis, but with the help of order flow and footprint, so that it gives us a better confirmation. The second thing that we are looking for is the volume is above normal. So again, this is a VSA concept and we're using it or applying it rather on a footprint chart with a better confirmation. And the third condition that we are looking for is that when these two conditions are met and the next bar or the next two bars after that or the third bar after that, the delta actually flips. So what that means is, for example, there was an up bar and the max delta and the delta were almost equal. So let's say we had a delta of something like this, 5.8k or 4.8k. I'll just tell you what a good number is to look at, and then this delta flips something like this. So the delta goes in the other direction. So for example, if you're talking about a bullish scenario, the delta goes less than 0, that is, the delta becomes negative. Okay, so this is the third condition. And the fourth condition is that when you are looking at this, all these conditions, the POC of the bar or the area, you can call it value area. I don't prefer to use value area inside a bar. What I want to see is the place or the area where the maximum number of sellers were. They're generally close to the POC on bars like this. Okay, so for example, when I'm talking about a bar like this where the max delta is equal to delta, you see the volume transacted at this place. So this is the POC and this is the place, more often than not, the maximum buying pressure would have been there, or the maximum market buy orders would have been there. So this area should have been breached. So the close, I'll just erase this and I would want to make it a little better. So what I'm looking at is that the close of the bar that we're planning to take a trade should be lesser than this high value area or the value area where the aggression was seen. Okay, so I know it is a little confusing, but this is what we're looking at. If you get used to this, it is a lot simpler than just simply looking at the numbers. Okay, so I know a lot of you find it difficult to look at the numbers and then go ahead and trade. It looks very interesting and fascinating to look at the numbers, but this is not what is going to make you money. And this is a simple strategy. So and all this is nothing new. It is simply based on the concepts of VSA, volume spread analysis, but in a more in a fashion that we can actually trade with confirmation. So let's recap what I just said, and then we'll go into the charts and see what exactly we mean by that. So the first condition is that the max delta and the min delta should be very close to delta. So an example of that is this bar, the other one is this bar, so the other one is this bar. So these three bars is very close to this condition. The second condition is the volume is generally more than the normal. So again, if you do not know what is normal and what is abnormal, I'll just erase this. There's a very simple technique in Go charting, and in fact it's called the color fade or the color marking. So as you can see, the light colors are low volume areas. As soon as the volume picks up, they keep getting darker. So there's nothing, I mean, you don't have to apply your brains, it's there over here. Okay, so you can just have these on and these 4 markers on, and so you see these are all abnormal volume bars. The next condition is the delta flips in reality. Okay, so I'm not looking at the bars just anywhere at random. I'm first looking for the first 2 conditions to meet, only then am I looking at the third condition. So that is very important. So the delta flip over here is happening. For example, this is the example you're talking about. It happens on sorry, it got deleted, doesn't matter, I'll just tell. So it actually happens on this bar, the delta flip. Okay, and the last condition that we spoke of is the breach of the place where the maximum, or the area where the maximum aggression was seen from one side. So on these 3 bars, if you see, the aggression would have been in these bars. Okay, so a breach of these bars or this place is what we are looking for to actually take a trade based on delta flip. Now the other thing you can use, turn it on its head, and I will talk about it in a little bit later, but this area, if it is not breached, you can just mark it as a support area and try to take a trade of it, because that means that these buyers that have come in have decided to be aggressive still, hold the value and then take it up, and if it does break, the trade is triggered on the other direction. Okay, so now without further ado, let's get into the examples. Okay, so let's start with this zone. Okay, and then we'll move on to, you can just go ahead and find a lot of examples on everyday charts, and again, one more thing to remember is that the volumes are relative. For example, this volume is high today, it may be lower tomorrow, and the same thing is applicable in a low volatile market where these volumes would be really high, and something like 2 and 3k are high enough for that day. So again, you don't have to apply your brains that much into this, because everything is here and this would be plotted automatically. The dark gray shades are high volume and they're plotted on a relative basis. So again, you don't have to worry about that, because I know a lot of you will have doubts with respect to that. No, getting into it now, let's get into any bar where we see really high delta, max or min delta, and then we will see what we are I mean, look at what we're wanting to find. So let's consider these 3 examples. Okay, first example is this one. We see the delta dropping significantly, and you see in 3 consecutive bars. Now the more number of bars you see like this, wherein the min delta is all equal to or almost equal to delta, there is a high chance, I'm not saying it happens always, but there is a high chance you're going to get a fierce pullback, 3 or 4 in a row and a delta flip like this. There's a high chance you get a fierce pullback. Okay, so it again, this is a strategy that does not work all the time, but it will give you at least a break-even trade. By what do I mean by that? I'll just tell you. So when we see these 3 bars, okay, although they're not as high as the previous bars, but they are high enough, and we'll look at all examples over here, and then there comes a delta flip on this bar. So the place in the last bar where I expect a lot of volume to be I mean a lot of sellers to be present is this one. Okay, so you can mark a rectangle and take it forward, and as soon as the delta flip happens, either you take an entry somewhere here. Okay, when this close happens, that is being aggressive. The conservative way is waiting for a pullback, but generally when a delta flip happens, the pullback is not so steep. It will be only till this level, this upper rectangle level, or even if you go here, if you go in here, your stop loss becomes the low of this bar. Okay, so in this particular example, you do get 1:1. This is remember, we're talking about scalps, and this is a very good way to find good scalps. And you generally even in a dull market, when we have I mean a balanced day, we'll talk about it later, this is a way to find the extremes and take trades on the extremes when you get your confirmation and take in trade. And in dull markets, you generally see something like this more prominent. In markets like what we are having these days, this is not prominent enough. I mean, the pullback is not enough. It sometimes just flips and goes in one direction without any stopping. So again, it is what it is, but this is a good way to take a trade. You get the first pullback. Again, this one gives you 1:1, 1:2, and The contrary part that we were talking about is we mark this as a support zone. I will just again show you what I mean. So this is the zone that I said is a support zone. A break of this, this is an unfinished auction in the second time. So if you've not watched my unfinished auction video, you can go over there and see how you can use this. And this is the, I mean, this gives you opportunities once over here, and the pullback, of course, for I mean, a more sensible way to trade and not being that aggressive. Okay, so this is the first example. Now let's move on to the other example and look at bars where we can find something. Now this is one bar that is close, but again the volume is not that much. Now I looked at this example, this particular example is because we had 3 consecutive bars like that. So that is why even the actually this is not low volume, this is high volume, but comparatively throughout the day, I mean, we wanted something higher, but since there were 3 consecutive bars like this, it should interest us. Now let's move on to the other direction. The other time this happens is in one bar over here, 3.55k. It is average. If you look at it, it's an average, it's just touching the average over here. So you, if you want, you can, but I wouldn't have preferred, because I know on days like this I'll get opportunities across the day a lot of times. Even so, let's look at the example over here. So this is a max delta close to the delta, and the next bar has a delta flip. So this is the area where I expect a lot of sellers to be there. I'm sorry, a lot of buyers to be there. The POC is here. Now breach of this will trigger my the trade in the other direction. So it does, but again, this is not a high probability trade. I'll be very frank with you, because it's, I mean, it's on average volume, and it's in an area where I know that this is the target at max that I can expect, because there will be a bounce, because just a few bars back we saw the other side happening on the min delta side. So again, this is a trade you can take, but again, I wouldn't have preferred. So let's move ahead and see something more substantial. So let's look at this bar, look at this drop. Now I know people would be saying that this is trying to find the bottom, but that is all Footprints is about. I'm not trying to find the bottom. I'm looking for a confirmation and looking for people to get trapped, and I'm looking for a scalp wherein I find the other side, the sellers getting too aggressive, or rather the laggards that have come into the market too late and have failed. Okay, now this is a very good example. By that I mean where we can get trapped and we shouldn't, and be patient with our trades. Now let's go ahead, and this is a very good 3 good bars you see, with good amount of min delta, and in fact 5 bars. Look at this min delta, and they are in tandem. Now this is a thing that we spoke about. If a delta flip happens after this, okay, it's going to be a really good fierce pullback. Okay, so let's see what happens in here. And again, it can be now when you're looking at bars like this with consecutive POCs close to each other and a lot of negative delta bars, so I know for these guys to get trapped, this is my area. Okay, as soon as it crosses this, I will get aggressive, because I know the area that it can touch. Let me delete this. If it crosses this zone, I know it will touch this in a flash. Okay, it can also go up to the VWAP till this point. I've seen this happen, a lot of guys getting trapped. What happens although is the area that we spoke about, that is this area where the delta is, or the sellers would be in maximum numbers, do not get trapped. And again, this the delta flip happens only for a very short while and on very low volume, which is not which is okay, but the price has stayed within the POCs of these bars. It has not been able to cross. So that is what I spoke about a little time back, is what we want is patience, because our rule says we have to cross this zone in order to initiate the trade. It has not. So being too early in places like this will put you on the wrong side. That is why it is so important to follow, because this is somewhere close to low of the day, or I mean low for the past few hours. So you don't want to be caught on the other side, and this is what I meant. Now let's go ahead and see something what we wanted. Does it come? Okay, now again, just a few bars after that, look at this volume. Okay, look at the min delta, look at the delta, they're very close. Max delta is absolutely 0, and look at this place. where suddenly a sort of delta flip starts happening, in the sense, look at the min delta over here and look at the delta. Okay, so the other side has started to step in over here. Okay, this is what I mean. So you don't need not be exact with that this turns positive, because these are just numbers, but look at the comparison. Look at the min delta and look at the delta. They're so close. The max delta and the delta are close, so close, and the min delta and delta are far apart. Okay, now the next thing that we do here is we simply draw this zone, okay, where we have seen, look at the volumes here, and we certainly know, if you're a conservative trader, this is the other zone that you have. But this zone, if you're not planning to take a trade, as soon as this breaks, it is okay. If you take an entry here, your stop loss should be just this point. I'll just mark it because we're scalping, so this is the point. So if you take an entry here, 140, 7-8 points is a stop loss and 1:1 is the target. If you decide to wait for the zone like we just spoke, and the zone for us is very, very clear. This is the inflection point. I'm sorry, let me delete this. And this is the inflection point. Okay, so if you wait like we spoke about in the previous examples, this is the pullback and this is the entry. Okay, and this is a confirmation bar that buyers are ready to step in at this point, and this is your entry. If you're aggressive, I just spoke about, as soon as this breaks this zone, you can just take your entry. And if you're a little conservative, you can wait for this zone to break as well, because it's the previous bar, but this is good enough. And you generally get such whipsaws because a lot of traders getting trapped. And even in the second attempt, you will see what I was just speaking a little time back. Look at the whipsaw. This is a gold standard bar, in the sense that this, when something like this happens, look at the min delta, look at the volume, and a delta flip will make something like this happen. All the traders that are trapped are going to move away, and it is going to fuel rallies like this. Okay, so it's a very, very good risk to reward ratio trade. If you even in this, if you've taken a trade, you're actually expecting at least a touch of this and this. It almost does. Not in the first attempt, it breaks it in the second attempt. So this is what I'm talking about. High volume bars with such flips will give you very, very good trades. Okay, let us see where do you see something else coming up. Again, these are 2-3 bars where we get really, let's start again. And this is the bar first time when it happens. Now look at this. Although the delta flip is not there, but the delta, min delta, max delta, and min delta are all very close to each other. So this is not a bar that we look at in terms of delta flip. Okay, so like we spoke in the other example, so this is a delta flip bar, but nothing happens of significance in the other bar. Again, in this bar again, okay, instead of closing, there is another max delta and min delta bar. So this is a zone that we mark straight away and look for a breach of this zone. If it happens, we don't know what is happening thereafter. Okay, we'll just mark this zone again. If it doesn't break, it acts as a support for us in the future. Then let me delete this. Then we go ahead and we see a big delta bar here. Okay, and this is a zone again. So we have another zone marked over here, and we wait for a delta flip again. Look at the delta flip in the sense that look at the min delta that has come up in this bar, and look at the delta which is closed. So this is of some importance to us, wherein we decide that if this area again breaks, we can take a trade, but we have a support right beneath us. So this is a confusing trade, and it is better avoided, because this is a support that we have marked. We have seen a delta flip of sorts, in the sense that delta has not flipped in a sense, but you see the min delta has really gone up. So obviously this is a place where sellers are. I'll just delete this. This is an area where I see sellers stepping in. This area is where sellers are stepping in. Either the longs are taking out, or are considering profit taking. I don't know, but this is an area where sellers are stepping in, and I want this area to be breached for any sort of trade initiation. And the next time in this bar, you see there is a huge delta flip, and in the sense that min delta and delta are almost equal. And look at the sellers here, they're again coming from the same region that we just spoke about. So I know now for sure that I'll just mark this area. There are sellers that are in this zone. Okay, they're trying really hard, and I know that I can initiate a short only after this zone is breached, because I know there are buyers in this zone. So again, this is a zone that we tend to avoid in spite of our strategy telling both the things. So we will wait because we don't know anything. It breaks, and we see a move on the upside. Let me delete all this. And now like I just spoke, this you can treat it as a support also. This was one zone, and the sellers were in this zone that we just spoke about because of the min delta, max delta. Again, if you are I mean, you like this strategy, or you back tested a lot of times, even forward tested, you will know that even this support acts really beautifully. It comes again to this zone, and it bounces back. Now something similar is happening. I'll just delete this, and in just a minute. Now let's go to these bars. Okay, a very similar thing. Look at the max delta stepping in over here. Okay, so we know the support could be somewhere here. You can have that mark. Now you can take a trade off here if you find a good risk to reward. Okay, so the zone, support zone that we know is somewhere going to be here, based on you can just have these rectangles extended to the end of the chart. It's very easy over here in Go Charting. If you don't know, just go there and right click, and there's an option extend to the chart, okay, to mark your zones. Now the next time we see is 1 2 3 4. Again, these are bars we really love, and a delta flip. And look at the min delta stepping in. So this is the bar where we see again these three bars. Look at these bars. Okay, a sudden delta flip here in this bar, and this is again a zone where we can simply mark and know that the sellers have stepped in. And any break of this point, we can get aggressive and take an entry. And our target, again, we know what we can expect at max is this one, because we threw over here and it is a support zone. And as soon as we enter and we get aggressive over here, if a entry is here, the stop loss should not be more than this, again, because it is somewhere close to the high of the region. And it does give us a 1:1.5, more than that, 1:2 trade. And this is what I was talking about. If you find these zones, these are very good fierce pullback zones, and the market does go to the other level really quickly and gives you the points, more than 10-12 points in one shot, and you can have them in your you can trade them. Again, it works. I have seen it work 60 to 70% or even more than that, and it is quite effective in one sense. Again, this is the support zone. The market comes, it tries to test it, and look at this bar. I'll just draw the support zone again that we spoke about. So this was the support zone, if I'm not wrong, and the market tests it over here. If you see, this is the zone, and look what happens. A really high volume bar, and the POC, the bar closes above the POC. So again, if you get used to this strategy, one way is to take the other side immediately and go for the long, because these guys are again getting trapped. Okay, they've been trying to break this so many times over here. Okay, they've all failed, and we knew as soon as this broke that there are buyers in this zone. Okay, we just marked it over from the previous zones, and this is an area where a lot of sellers are getting trapped. If you don't know, if you're finding it difficult, I will just do something that will make it easier. So let's go here. If you don't like this volume and you want to see delta, I'll just tell you what you can do. Go here and select delta. Now, do you see what I was trying to say? This is a really high volume node, which we're just seeing in the volume, and look at the sellers that are getting trapped here. Look at this. This is all red. Okay, so these sellers have all got trapped when the bar closed here, and we can certainly expect a jump at least till this point, where we see some sort of sellers were present. We don't know what happens here, but we do know that there was some sellers present here when we just marked. So this is our target when we take this trade, and this is a stop loss. So this is a 1:1, I think, if I'm not wrong, trade. And you can attempt that. Now the next time something like this happens is, look at this. I'm not even looking at the bars. Okay, look at this. 1 2 3 4 5 6. This is the first bar. The delta flip happens. Now according to a strategy, we found our bars. Now we have to mark their POC. So let's see where the delta flip happens. So this is the POC. I'll just shift it back to volume that I prefer, so that I can see clearly the POCs and the volumes. Okay, Now we mark this zone. Okay, look at these volumes. Okay, so I want to see a breach of this. When something like this happens, a delta delta flip, as soon as this skips over here, in fact I'll just mark it better so that all POCs are covered. This is the one. So when we see something like this, and in fact even this zone, okay, so I know this zone can act as support, but an immediate breach of this all these zones can I mean trigger your entry. Your stop loss again will be just here. Why do I say here? Because all the maximum volume is concentrated here. So your stop loss is here. Wherever you find an entry convenient here, because your entry would have been triggered somewhere here also. If the bar closes immediately up, you don't take that entry, but anywhere, even in this bar or this bar, you take your entry. Your stop loss is here. Again, your target should be at least, when you're looking at such a wide this thing, again you can go down a strike. I'm just telling you an example. So you can go at premiums where the strike is about 120, 130. So in here, for example, if you're looking at 216 or 215 is the entry, and your stop loss is almost 13, 14 points, it is at least 15 points is what you should be targeting. And similarly, you can enter somewhere here. Now when something like this happens, we've just discussed, and if these traders get trapped, look at the high volume delta bars, high min delta, max delta and delta bars. If this flips, we will get a great risk to reward, I mean trade. And even if you don't get it in the first shot, we just spoken, it's the pullback also gives you, this is the zone we marked, will give you a good entry. And let's see what happens thereafter, because these are bars, you can see these are bars that will give you really good fast moves on the other direction when these guys are getting trapped. This is the zone I'm talking about, these high volume zones with high delta bars. So you can again mark this. Now you can take a trade on the re-entry or get aggressive and take an entry here. Again, if it doesn't happen in the first pullback, we generally get really sharp moves on the other direction. So I think the videos got stretched a lot because we had a lot of examples to discuss. You can keep going on and see. Now this is common in these days, because you see a lot of high volume max delta, min delta bars and a lot of moves like this. This is not so common in low volatile markets. It happens thrice or four times a day. On days which are not volatile, and generally we find them more often than not. But I hope the idea is clear and it will help you in some way or the other. Until next time, thank you. Bye bye.